Good morning, everyone. Welcome to Office Adda 24/7. My name is Niharika Walia Bhatnagar, and I am with you with the area of ABFM. So today I'm going to start up with the next chapter. We were done with startup finance, we were done with hybrid finance, and all those topics now. So I'm taking up another topic today, and the topic that I've taken up for today is um, private equity. So first of all, please confirm if I'm audible as well as visible clearly. And let's begin with the session. Okay. So, done everyone? Yeah, it's visible. Chaliye. When we talk about private equity, now we are going to talk about venture capital. We are going to talk about investing. We're talking about seed financing. So there is a lot of things in terms of this topic. So let's begin with it. Today, I'm going to talk about private equity and venture capital. Now, what do you mean by private equity? And what do you mean by venture capital? Right? Both of these terms are definitely new. Um let's talk about it. When we talk about private equity is that form of equity in which you will find that the organization, again, the organization is deciding ki, I would like to give shares to Mr. This or Mr. X or Mr. Y or Mr. Z. I don't want to give shares to anybody else. And the reason I want them to have a say in the organization. I want them to be a part of my organization. Nobody else should be there. So they're very clear about the fact that these are the set of people to whom I want to give my shares, or the people to whom I want to give my shareholding in the organization. Now, there are certain people called venture capital. If you would have seen Shark Tank India, you would have seen that many people come and say that I have this much net worth, we are already working in this way, and we are looking forward. We are looking forward towards a scenario that what if we can make some good money through um, the finances that you can provide us, because we want to go on large scale now. For that, we need money and we can prove our worth. So, what they'll do is they will try to prove their worth, and through the worth that they are giving, they will get the ultimate receiving of capital or whatever you call it. They can have a part of equity, they can provide you some part of equity, some part of debt, and whatever they look forward to. Normally they take a part of equity for sure, because ultimately they say that we are going to have an ownership over the organization up to this much percentage. Secondly, in the organization, whatever is happening, we should be informed about it, because ultimately we are investing in your organization. They normally invest in the organizations which are already formed and are now trying to grow further, right? So this is something which is called seed financing. It is called seed financing, right? So this is what we cover in this area. So based upon the venture capital as well as seed financing, let's start with the topic. It says, what key distinctions exist between venture capital and private equity? Venture capital is for small business, private equity is for large. There is no distinction, the terms is interchangeable. Private equity focuses on early stage, venture on mature. Venture capital involves high risk, high reward, while private equity is low risk and low reward. What would be the point there? Okay, when we talk about the venture, now venture is basically for small businesses. This is actually for small businesses. While when we talk about private equity is for the large corporations. Matlab, I already have an IPO, and now I'm a public company already. But now I don't want to remain a public company anymore, because my company already has a good turnover in crores, and already I'm growing further. I'm like, I don't need people's money anymore. I want my business to grow on their own. So that would be covered here. So in this case, the correct answer would be venture capital is for the small business, while private equity is for the large corporations. Acha, in what ways did Indian development financial institutions contribute to risk capital before the establishment of venture capital funds, providing bank loans to the startups? That's our A. And then B is subscription to equity, seed capital, other forms of risk capital, offering government grants to innovative projects or facilitating partnerships with multinational corporations. In what ways did Indian development financial institutions contribute? See, Indian development and financial institutions are really helpful right now because they're working towards the area of these financial institutions are not only providing financial help, but they're also guiding those small businesses how to run their business. Because one problem with the people is they don't know how to run a business, and that is where they face a lot of problems. So it is based upon the fact that subscriptions to equity, to seed capital, and other forms of risk capital. The answer would be B. Subscription to equity, seed capital, or other forms of risk capital. Then, what role did ICICI Venture play in the early stages of venture capital in India? What would be the point? What role did ICI? ICICI has played a very important role in terms of the working overall, if I tell you. Okay, so it has been leading the multinational investments or focusing on large scale industrial concerns, or is it acting as a joint venture between ICICI and foreign companies, or aiding the establishment of venture capital? Basically, now what ICICI has done. It was earlier TDICI. So when we talk about ICICI, na, it has been leading financial investments. No, this is not the place where you'll find leading financial investments. Focusing on large scale concerns. No, not really. They, no doubt, now ICICI has developed so much that it has made its way to all those high level of securities as well. It's one of the active banks which have already been actively buying the for the government securities as well. But I won't say this is for only for large concerns. But acting as a joint venture, there is no JV for this even. Joint venture is when two people or two organizations come together and they work together. So in this case, the correct answer is D, aiding in the establishment of the venture capital subsidiaries. So the correct answer would be D. How did the liberalization of foreign investment impact the Indian venture capital sector in 1990s? It led to the decline in venture capital investments. Indian investors became more dominant in the in the sector. Multinational investors become more prominent players, or venture capital shifted their focus to the government projects. Acha, something has happened when we talk about 1990s now. In 1992, India had opened up their 1991, sorry. In 1991, India opened its economy towards the era of those people who were मतलब India had faced a lot ना. हुआ क्या था at that point of time, India had almost no foreign reserves. That means we didn't had enough money to buy even our basic those staple things like pulses and all. Even those were not available. So this was basically something which was hitting hard the entire country. So what they did was they decided to open up the organization, and they opened it up in such a way that the organization decided the opening up towards the country for international transactions. For example, we took the three steps, that is first was liberalization, privatization, and globalization. That is LPG. They decided to go for LPG. When they decided to go for LPG, they could see that MNCs were coming in India. MNCs were multinational companies which were already very strong. So Indian players didn't stand anywhere. There were so many companies who were before the entrance of these people was very renowned. But as soon as the multinational corporations came in, their working just died. For example, if I talk about there's an example before 1990s, you will find that there was a particular brand of cola that was Campa Cola. Campa Cola used to be very popular during the period when the Coke, before the Coke came. At this point of time, other than Coca-Cola, you won't find any of those other than Pepsi and Coke. Whatever brands came up, all those brands were either acquired by PepsiCo, either they were acquired by Coke. So all the multinational players now, they became so prominent, they became so strong that ultimately the domestic players got hit because number one, they didn't had that much of finances that they could go that much large scale. So that their cost of acquisition and their cost of production was definitely higher than those of the ones which were in terms of the Indians. Against Indians had more cost as compared to the foreign people. So yeah, we can say that these players became more prominent. The multinational companies became more prominent, and ultimately, if you see today, most of the things that we are getting in our country is not related to us. It is more related to the different the even more or less. I think most of the companies that you will find who are actually making a good amount of money are not Indian, right? Except Tata, if I talk about it, Tata, Wipro, Infosys is something that Infosys is one of them, which is again Indian. But you will, if you look at the other companies like um, the big four companies in terms of auditing, and if I talk about the production, we talk about Hindustan Unilever Limited. Then we talk about the Hindustan Unilever is basically Unilever at the international level has one particular organization in India, which they call Hindustan Unilever. And then HUL, then we have Procter and Gamble coming in our country, then we have Coke, we have PepsiCo. So all these are prominent players of the market. You will find very less Indian companies in the market. Specifically, if I talk about this area, you will find more or less most of the earnings in our country is made by, in terms of the Indian companies, are made by all those people who are providing the tobacco and other products, right? So basically, what is happening is, if we talk about the entire selling scenario now, specific Indian companies are very limited which are making good money. Khair, I remember one right now, that is legit. Basically, you would have heard it is basically legit papad, which were started by it was basically a trust which was formed in India, and it has been making a good turnover right now. Yes, there are organizations in India which are making domestically good amount, but still MNCs were and still are very prominent. Okay, now comes the next question. The next question is about what factor contributed to the emergence of consumer services and consumer retail as leading competitors for venture capital funding in India. Number one is government subsidies. Number two is technological advancements. Number three is shifting patterns in consumer behavior. And number four, that is increased competition from large corporations. What factors contributed towards the emergence? Why did consumer services came? But earlier na, people were told कि industries are there. You should be thankful to the industries that they're giving you something. So technically na, they were like, we are giving you something, you should be thankful. So in this case, what you will find is there is a consumer emerge services where which didn't even exist for them. They were making they were actually giving us all those things which we were obliged to the producers that they are making something for us. We should be thankful to them for that. Later on, consumer became the king. It was like you should prepare things as per the requirement of the consumer, not as per the machines that you have got, right? So in what factor contributed towards the emergence of consumer services? The government subsidy, technological advancement. This thing will not determine the particular area. I would say the correct answer would be the consumer pattern has been changing a lot, right? Shifting the patterns in consumer behavior. For example, the consumers have now become more demanding, right? So we want a few things and we do not want the other things. So we can actually choose between this is what I want and this is what I don't want. We have that clarity in our minds. So that's what you will find in this era. So the answer would be C, shifting patterns in consumer behavior. And the next point is what challenges might be a young private firm face when seeking venture capital in the early phases of development? Lack of government support, difficulty accessing public financial markets, excessive regulations, or high interest rates on loans. Acha, young private firms have been facing a lot of problems. For example, if I start up my venture and the venture has just started working, one thing is for sure that if I go to someone and say that I need loan, and he would say, "Can you pay me back?" I said, "Currently, though, yeah, I'm making decent amount. I think I can." And then they would be like, "Show me the books of accounts." I'll just show them the books of accounts. They'll say that you just started your business. You don't know what is going to happen in the next 2 3 years. Because yeah, the demand pattern is changing every single day. We are also changing our business every single day. Then the entire thing would be hit. It would be like there would be in this case, what would be the point? Then there is a lack of government support. No. Difficulty accessing public finance market, that can be there because they do not have all the financing options which the public companies possess. And then we have excessive regulations in our country. Yes, the regulations are there, but I would say worse is in USA. If you will go through the Sarbanes-Oxley Act, or also called SOX, that act is called SOX, Sarbanes-Oxley Act. So the Sarbanes-Oxley Act is something which has been working that with there's excessive regulations in terms of the working there. And then high interest rate on loans, not really. Sometimes these organizations get a lot of Startup India scheme is there, and there are so many other schemes which are helping all these organizations. So yeah, in this case, one problem that they face is they do not reach out towards public financial markets, and they cannot. They're just amateurs who have just started with their businesses. So for them, they're for many organizations, they will just call them rookie, the ones which had been working in the country for more than 50 years, 70 years. The organization which has just been formed, for them they're just rookies, someone who has just started the business. And if you have those kind of big clients, then you would not be interested in attending all these clients there, you know, because it is a more about how much of money that the organization is able to generate for the business ultimately. So the plan is always like get all those people for the financial market which have the best opportunity towards raising of money. Then, in what ways did venture capital fund assist companies in making public offerings of stocks, providing low interest loans, then offering specialized knowledge, or acquiring the government grants, or actively participating in a company management? Basically, now when we talk about venture capitalists are those people who have invested money in this organization. They are basically the coaches for the organization. They are the guys who are providing all the information regarding how to run the business, how what can they do about it. So I would say this is more or less about offering the specialized knowledge, right? So in terms of the venture capital, the venture capitalist is very strong person who's looking forward towards the business, towards the business in terms of this, where they are talking about specialized knowledge, that you need specialized knowledge, we'll provide that. Then for example, if you've seen Shark Tank India, there were so many people who were there, right? So those the sharks which they call them, so those people have startup knowledge. What should you do when you're starting a business? What is that feeling of starting from scratch, right? So in this case, the correct answer would be offering specialized knowledge. That would be the next point. Done? Done. So let's move on and look at the next question. Here comes the next question, everyone. How does the concept of risk factor into the decisions of decision venture capital funds? Um, See, when we talk about the risk factor in terms of ventures, one of the problems I would say ventures face is that you are giving money to a startup. It's just a kid. The organization is just a kid which has just started, and you don't know what would be the impact of it, whether the organization will grow further or it would be hit by something. Indeed, now, so one particular thing is clear that there is a lot of risk due to uncertainty of the growth of this organization. So, venture capital funds avoid high risk investments. High risk investments are preferred for guaranteed returns, or the potential for high rate of return justifies the acceptance of higher risk, or venture capital funds only invest in low risk industries. वैसे तो there is no point where venture capital would be putting a lot of money in low risk areas. So one thing is clear, this is eliminated. They do not avoid high risk. They just can't. The risk is always there when you're starting a business. You cannot say ki I've just started a business and there is no risk involved. So I would say high risk investments are preferred. There is no guarantee. Unfortunately, in the high risk area, you will never find a guarantee. So this one's also wrong. So I would say this is the point, that the potential for high rate of return justifies the acceptance of the high risk. Acha everyone, if you're looking forward towards the CIIB ABFM revision batches, na, the my particular batch would be starting for ABFM soon, right? So that would be starting in December. So if you're looking forward to it, na, you can check it out on our website and our app, and you can use the code Y541. Currently 81% discount is going on. If you are using the app now, then 1% extra discount is also available. That is for 81%. Otherwise, it is available for 80% if you are not using the app. So you can check it out on the website or in our app for further details. Ultimately, this is a win-win situation. Or if you are preparing for the next year, not preparing for this year, you can buy the Mahapack of CIIB as well. I'll show you by the end of this particular session where to go if you're looking forward towards the Mahapack, because it is available at double validity as well as 81% discount is available. So win-win situation if you're looking forward to it then. Okay? Okay, now let's move on and talk about this. The potential for the high rate of return justifies the acceptance of a higher risk. Acha, next question. What are some of the industries mentioned as recipients of venture capital and private equity investments in India? When we talk about this area, agriculture and manufacturing, energy and utilities, then information technology and services, software development, then telecommunication and more. Or last one is D, that is construction and real estate. I think venture capitalists as well as the private equity, these are required in those organizations which are large scale, matlab that cannot sustain on its own. If you'll see now, this is something that will be agriculture and manufacturing. I think I've seen very less investments in terms of agri area. Energy and utilities, yeah, it requires a lot of money. IT services, software development, telecommunications, and more, or construction and real estate. In terms of, I think in the last couple of years, if you see the trend, the more investment is towards the area of information technology, services, software development, and telecommunication. They had been growing like anything in the market these days. So in this case, the correct answer would be C, information technology and services, software development, telecommunication, and more. And here comes the next question, everyone. I think this would be the last question for the day, and then we will call it a day. But before that, I'll show you the session, where to go if you're using our app, and where to go when you're using our website to get the maximum discounts. So stay tuned till the end. Then, what are some essential contributions made by the foreign venture capital investors in India, as mentioned in the text? Limited involvement in the post financing activities, lack of due diligence, then incorporating the Western investment philosophies or passive approach to exiting the market. Acha, when your venture capitalists ultimately exit the particular organization as well, after a couple of years of guiding the organization, growing it up, then you are like, you hoga, you have matured enough. Now it's time that we leave. So what they'll do is they will sell off that particular share and then they move on to help some other organization. And if they feel that this organization is something extraordinary, then they won't exit. What they'll do is they'll try to take over the entire organization. They will try to take over the board of directors even. Okay, ठीक है, now this is it. Now this is our company and now we will take over. This thing happens in many organizations. So it is always better that your organization knows what kind of capital they are getting. So limited involvement in post-financing activities, not really. Acha, then comes the area of lack of due diligence. When we talk about the lack of due diligence is important. If you do not have it, this is the question exactly. Then incorporating the Western investment philosophies, they have actually started incorporating the Western philosophies. In philosophies of these due diligence and all was there. As I told you, USA had been using Sarbanes-Oxley Act. The SOX is one of the toughest criterias to meet. And then active post financing involvement. This is something which they had been doing. Once you have entered the organization, you tell the organization where they are going wrong, how to make it correct. All those things are actually done by them. So in this case, the correct answer would be C. Answer is C. Okay. So this is it for the day. But before I end my session, let's move on to our website Adda 24/7. As you all go to the area of www.atta247.com, there you will find it. Good morning, everyone. Welcome to Offices of 24/7. My name is Niharika Valia Bhatnagar, and I'm with you with the area of ABFM, that is Advanced Business and Financial Management. Acha, in the last class, we had started working upon private equity as well as the venture capital. When we talk about these two topics, that is private equity and venture capital, what's the difference between the two? Have you ever thought of it? When we talk about private equity and venture capital, these two terms are different in multiple areas. When we talk about private equity is when we choose the person, ki, sir, you are the one to whom I want to give the shares of my company so that you and I are having the control over the organization. That's sorted. Then came another one. The second one that came was the portion of venture capital. Sir, I have started with my new business. The business has been working well in the last 2 3 years. We had made a good revenue from our business, and now we are looking forward towards further investments. What is your take about it? And if you would like to help us, then in what way you can help us? Can you provide us capital as well as guidance? That is venture capital. So when we talk about these two, that is equity, the private equity, that is the ownership that we choose privately. Many organizations have now shifted from public companies once they have gathered a huge amount of money. They're not worried about having it. So they are having private equity, and the ones which are growing, they are in the area of seed. They're looking on from the point of view of the beginning of the organization. Then for them, it is venture capital. It is venture capital. ठीक है. Just चलिए, let's begin. So when we talk about the private equity and venture capital, what are the various things that we are going to talk about? Number one is what are the key distinctions that exist between the two. Matlab, this is what we have just discussed. When we talk about venture capital, it is for small business, while private is for large corporations. There are no distinctions, or private equity focuses on early stage investments, while venture capital are looking forward towards mature, or venture capital involves high risk, high reward, while private equity involves low risk, low reward. When we talk about these people, then there are a few things. Venture capital is actually for small organizations, right? So when we talk about this area, it is for the smaller organizations, while for the larger organizations, they have the area of uh, for the larger organizations, they are always using the other one. That is, private equity is best for the larger organizations because they can arrange their funds accordingly from this. You know, that's the difference between the two. Okay. So, what do we have in terms of the next question? Okay. Uh, the next question is about, I think we were done with this area. We were talked about TDCI. There are a few questions that have been repeated. So, what are the some essential contributions made by foreign venture capitalists in India? So this is one of the topics that we haven't done yet. You know? So when we talk about this area, what are some of the essential? We have talked about globalization in the last class. What exactly globalization did in terms of liberalization, privatization, globalization. I also talked about Campa Cola coming to our Campa Cola being our domestic company now is eradicated altogether just because right now there's an existence of MNCs in our country. So when we talk about MNCs coming into our country, did foreign venture capitalists also entered in our country? They have also come to our country. So they have actually entered the organization. They have also entered our country. Now there are foreign institutional investors, there are foreign venture capitalists who are investing the money into our country. But what are some of the essential contributions which have been made by them? When we look at their essential contributions, number one is limited involvement in post financing activities, lack of due diligence in terms of investment decisions, incorporating Western investment philosophies, rigorous due diligence, and active post financing involvement. When we talk about this, Anna, when we talk about due diligence, they have talked about SOX. I think in the last class, even I talked about SOX, Sarbanes Oxley Act. That was when we talk about Sarbanes Oxley Act, there are certain clauses in SOX which are so difficult to cover. They have the governance in a very tight manner that there is no flexibility. कि अच्छा, in our country, we find loopholes and we utilize them. There, they have made it so I would say so rigid, and at the same time in such an extensive manner कि the chances of frauds are little less, and when the fraud happens, they're definitely at a very wider scale. So this is something which they have definitely done. See, wherever you go, you bring your own country's way of working into the other country. Na? So they had brought their Western investment philosophies and also the due diligence, which is a part of their working, and active post financing involvement. Once you've given money to someone, how do you know that they're using the money properly? Do you know about that? If you don't, then how can you trust them? So it's way better that you keep that particular thing under control and you note down what are you going to do about it. Okay, so that would be the point. Then comes the next point. What type of investment characterize the Indian industry during its formative years? Actually, during the formative years, when we talk about Indian industry, na, after 1947, there are certain things that have happened. If you go through it, na, 1947, we there came a point where we had our industrial revolution. Matlab, India's individual industrial revolution. That is something the Industries Act and everything else, including the Companies Act, came in 1956. So, if I this is from the historical point of view of our country. So during the formative years, we were all focused towards public sector undertaking. PSUs were given a lot of importance. They were all the way given investments, grants, subsidies, and whatnot. Then, what type of investments characterized that at that point of time? Was it the large scale private equity investments, venture capital style investments in small enterprises, or investment exclusively in matured companies or government funded projects? What was the thing that was happening at that point of time? See, PSUs and all were definitely there, but what about the other organizations in the Indian industry? There are other companies which existed while the PSUs were existing. At that point of time, the private players didn't had that much money. That is the basic reason that government had to take over. If you go through that particular area, all the infrastructure was built by the government, the bridges and everything else that was maintained by the government, dams and all. Ultimately, it was more towards the government. Reason was the venture capital style investments were at that point of time. The private players were smaller, so they were small enterprises in early stages of development. They were growing. They were kids at that point of time. When Britishers left, we definitely were. India was definitely something which it was like a major part of the resources were taken, people were exploited, people were weak, there was less funding for the people. So ultimately, the players were definitely small at that point of time. So when we look at the answer, it is venture capital style investments in small enterprises because nobody had that much of funding other than the government at that point of time who would give money to enhance the businesses further. Okay. Acha, now is why have investments in private equity become more widespread in India in the last 10 years, right? If I look at the last 10 years now, matlab, I think after 1990s, if you go through it, uh, from 1990s only you will realize that after 1991, the new economic policy ultimately that was brought by the country, which was ultimately the last resort that we were left with. So when that particular thing happened, um, India had to open up. India had to allow foreign direct investments, foreign institutional investors, which came into our country at that point of time as well. Slowly and steadily, we have allowed all those investments to be there. So now these investments exist. So, what is it that they are having now? Greater ease in selling small and early stage investments, then desire for fund managers to handle smaller portfolios, difficulty in managing larger pools of capital without increasing the number of companies in portfolio, or lack of interest from large private equity companies. Actually, let me tell you one thing. Uh, we are uh, we are a country of around 1.5 billion people. More than 17-18% of the entire world population lives in our country. At this point of time, even if I say 1,000 people, matlab, one chunk of the 1.5 billion people is involved in investing, do you really think that would be smaller? Then there is no greater reason small selling small and early stage investments. This has not really happened. Desire for fund managers to handle smaller portfolios. Think about it. I am a businessman and I am saying ki nahi, nahi, I work only on small scale. I won't work on large scale. That doesn't make sense. So you will never find a fund manager saying ki Bhagwan, I wish I have a smaller portfolio. He will always be like, if I'm managing this much portfolio, I wish to handle more in terms of portfolios. So lack of interest from large equity, private equity companies, it's like you are hungry, you need food, but you are denying it. Would you really do that? No. You whatever you get at this point when we are hungry now, at that point of time we would eat even those vegetables or those pulses or any of those dishes which we just don't like at all. That's because that's the only thing that we are having. Hunger brings it. So the private equity firms cannot be cribbing about the fact that nahi, nahi, I work only on large firms. I don't work on small firms. Whatever money is coming in, every single penny they are putting in the share market. They are putting it in the market altogether, securities market, and growing further. So it just doesn't make sense that they will come up and say, nah, I don't have interest in it. So one particular thing is definitely there. If we are using elimination method, A, B, and D doesn't make sense, while C makes pure sense. Difficult managing larger pools of capital without increasing the number of companies in portfolio. Now, what do you mean by portfolio? Warren Buffett had said it once. Never put all your eggs in one basket. Can you put everything in one basket? Can you really do that? Think about it. If you're putting all the eggs in one basket and that basket falls, all the eggs are gone. So that means when you are having securities, why to put it in all one organization? Split it up into different organizations. If one of them, even if this one falls, you have others which would work out for you. And ultimately, it would balance out your income. So basically, in terms of larger pools, yes, you cannot keep the larger amount into one company. So if you would see the portfolios now, you will see that, for example, I was looking at a portfolio a few days back. So in that particular portfolio, what I saw was shares of the company. They were divided into different areas. Ki, acha, if I talk about the shares of a company, na, they were divided. A part of it was invested in banking, a part of it was invested in FMCG, fast moving consumer goods. So what is happening? Fast moving consumer goods are always required. Even when COVID was there, na, toothbrush, toothpaste was still required. Even if COVID was there, the entire world was sitting in their homes, but they required soaps. So the basic things, the fast moving consumer goods are always required. So there is an investment there, there's an investment in the banking. So this is how you split up in among the various sectors from which the company can earn and give it to their investors. So that's one of the things. So obviously you have to think about larger pools of capital would be praying कि भगवान और पैसा आए और हम और पैसा लगाएं. It is not going to be easier to them. It is going to be more and more difficult because handling 10 rupees in your pocket is absolutely fine. But what if I give you 1 lakh rupees in terms of 500 rupee notes? It's such a big bundle. Where would you keep it and how do you manage it? That is, see, difficulty in managing larger pools of capital without increasing the number of companies. This is a problem. But this is something which is existing as well. Okay? Here comes the next question. What is one reason for the shift away from investments in small and early stage companies? Why are we moving away from small and early stage companies? Actually, now early stage companies are dicey. That's what I feel. कि if you'll see that many organizations are like, Acha, we have to keep freshers, while everybody is a fresher at one point of time. But when you are keeping them, then you are like, "Ki, Arey, why do I have to keep freshers?" Same thing happens with the investments. When you are parting from the investment which is small and early stage, who would buy it? If I give you a raw cake and I say, ki, sir, you can prepare the cake on your own now. Further, you just have to heat it up twice or thrice. Or, matlab, for example, I have half cooked the cake and right now, roughly 3 to 4 minutes in oven is still required. So what I'll do is I'll just tell you, okay, last 3 4 minutes, you buy it, you take it to your place and then do it. You'd be like, what? That doesn't make sense. Same thing happens with the small and early stage businesses. These small and early stage businesses are basically growing. Why would someone buy something which is raw? Till the time they don't see something in terms of the potential in that organization, they will not put an effort. So increasing difficulty in obtaining venture capital funding, वैसे ऐसा नहीं हो रहा. Venture capital funding has now been available at a larger amount even. Challenges in selling such investments. There are major challenges in selling these investments. Lack of interest from foreign investors and decreased risk appetite among the fund managers. The risk appetite has definitely gone down in terms of the working there. Ki, sir, the point is that nobody wants to take so much of risk. So, what is the reason? But I would say if the appetite of the fund managers will decline, ultimately the return will also decline. So, I think fund managers would like to reduce the risk, but by adding more into the portfolio, not by parting away from some small people who have the potential. So, again, I would say fourth one is definitely not the answer. Lack of foreign investors, that can just not happen. India has been growing at a very good place. So if we are going good, the people are going to support us. And then it's challenging in selling such investments. This is all the only problem. Rest everything else is not a bigger problem. The problem is that it is very difficult to sell such investments. Okay, the problem is selling of these investments. Acha. Here comes the next question, everyone. It says, why do Why do the venture capitalists exist as an alternative to traditional lending? But the traditional lending was you show me your net worth. You show me that you have the capability and credibility to pay me back. Only then I can give you money. Think about it. Even to get loan, you need money. If you have the ability to pay back, only then someone will give you money. So why do venture capitalists exist as an alternative to traditional banking? To compete with banks in offering lower rate of interest, to provide financing only to companies with tangible assets, to address high risk environment with traditional institutions avoid, and then to discourage the establishment of new enterprises. With the answer. To compete with banks in offering lower rate. Venture capitalists are not existing just to compete with banks. Their aim is not to compete with the banks. Somehow they are being supportive towards the financing because sometimes organizations are not able to generate funds because of lack of securities and all. So banks sometimes are totally clear about it that we are not providing the loans. Then venture capitalist hops in. Then to provide in financing only to companies with tangible assets. So with tangible assets, this doesn't happen because there are financial companies which have so many intangible assets only. Even in terms of IT industry, you will find many assets which are intangible. So that should also be considered. So first two are definitely out. Number A out, number B out. To address the high risk environment that traditional financial institutions avoid. See, traditional financial institutions are basically risk averse. They don't want to give so much of loans. They don't want that much of loans given to a risk area because again, banks have been pressurized to a great extent. In any bank, wherever you see an NPA, okay, non-performing assets, then what will happen? They are pressurized to great extent that they will never give loan to anyone whom they feel there is a potential, but there is a risk that pata nahi, will they recover the money or not. So they will never be happy with the fact that they are giving money to someone who does not have the capability to pay back. So that is something the venture capitalists will come back. You have a potential now, you have proved your business earlier, now give it to me, I'll help you out. That is the thought process of a venture capitalist. So in this case, can I say they take up the high risk, high reward area, while the traditional banking is like, I'm giving you a loan, pay me back, and that's it. So this is what you will find. So this is not to discourage the establishment of new enterprises. All these small organizations are existing because of traditional banking as well as venture capitalists. If both of these are discouraging, then what's the purpose of having any of these altogether? You know? To address the high risk environment that traditional financial institutions avoid. Okay, just a moment. Chaliye, I think yes, this is where I would like to end the particular area of startup equity, but private equity as well as the venture capitalist. But before I end my session, everyone, our revision batches have started, right? And the ABFM revision is going to start from 3rd of December, and it would be till 8th as we have our exam on 9th. So we'll be meeting in our classes there, but Chaliye, let's look at our website first as well. Let me show you what exactly the batches are there for ABFM. And at the same time, if you haven't joined the Telegram channel, go ahead and check it out. JIIB exam 2023, Niharika ma'am. You will find it on Telegram. I've been sharing the marathons and the other details on that particular area. Sorry, this is CAIIB exam 2023, Niharika ma'am. Okay. This is the name of the Telegram group. I am sharing all the details of my marathon classes there, as well as the sometimes I share the PDFs of these classes as well. And anybody who's a part of the paid classes, they get all the intimations, and overall you get it twice. The system software and everything else is already providing you. We just give you another level support ki ma'am, I have taken up this particular topic for today, so you can definitely come and attend it live, right? So let me tell you what's the benefit of our courses. uh, Good morning, everyone. Welcome to Officer 24/7. My name is Nehar Kavalia Bhatnagar, and I am with you with the area of ABFM. Okay, as we were talking about the area of ABFM, let's talk about let's talk about the questions that we have today, right? So let's begin with it. We were discussing private equity and venture capital. Here comes the first question. When we are analyzing the various cases now, ki what exactly the provision for venture capital is, if I'm investing in an organization, what am I going to get out of it? Those things are important, isn't it? What is analyzed in great detail during the evaluation rating of proposals? What is that particular thing which is analyzed in great detail? Entrepreneur's favorite color, then this is something irrelevant for sure. Entrepreneur's track record and future turnover might be relevant. Projects, locations, weather conditions, or number of pages in the proposal. There is only one thing that is important, that is B, the track record and future turnover. If your future turnover is something that cannot be clearly anticipated, then there is a lot of fear key. What is that particular thing that we are having, right? So, in terms of the working, it becomes very much troublesome in terms of the working key. When we are evaluating the proposal, then we have to look forward towards multiple positions, multiple things regarding it. For example, if I'm looking at an entrepreneur's proposal, he proposed that he is preparing a specific product, and I've not known much part of the product. So then it would be a little troublesome key what exactly the point should be, है ना? Right? So in this case, the correct answer is entrepreneur's track record. What exactly he has been doing in his working altogether, right? Chale. Now comes the next question. Which characteristics are considered during the evaluation process? Entrepreneur's financial position, his experience, technical competence, manufacturing and marketing abilities, or entrepreneurial talents, or entrepreneur's personal net worth, or entrepreneur's preferences in the business. What would be the thing that you will be choosing in terms of interpretation? When we are evaluating a specific project, then what is it that we are going to do? What is it that we'll be doing, everyone? See, in case of a project now, we will always be looking forward towards entrepreneurs multiple things. We cannot just look at his financial position and we'll be like done. If it is good, then we can give them the money there. Because the point is, at one point of time they might be correct, and maybe later on they aren't really going well. Na? That is not good for the business at all. So in this case, I won't say the financial position is the key. Again, then entrepreneur's personal net worth, again it is important, because if he has money, he will be able to pay. But I believe B point covers wider number of points, while entrepreneur's preferences in business doesn't cover that much. So basically, B covers all the relevant points which are required: entrepreneur's experience, their technical competence, their manufacturing and marketing abilities, as well as entrepreneurial talents, right? It's covering all of these. So, next, what is the next step after exhaustive risk management and relevant considerations during the evaluation process? You are evaluating a specific process. When you are evaluating a specific proposal, you will always look at the project in a detail, na, isn't it? You will look into the project in such a way कि what exactly is being covered in it. Basically, when we are talking about the project there, then evaluation would mean that I'm going to see what exactly the books of accounts are showing, what exactly is happening in the books overall. So what is the next step after exhaustive risk management? The next step is execution. नहीं. We can start with execution, but what next do we do? Start a new evaluation process, renewal of a proposal, or negotiate the terms of the contract. See, before you start with the process now, you can execute it. But you need to see whether it is turning out good for you or not. So first of all, you have to negotiate the terms of the contract. You will have to see what are the terms of the contract and how can we improvise or at least work upon it. Ki negotiation is required now. If the person is saying ki 10 rupees, and then we say nee, nee, it's okay 10 rupees per unit, but that particular thing might cost you 2 or 3 rupees only. So you'll be like, why are we giving this much amount of money? Why there is no need. So that is something which we'll be covering in this specific area. So when we talk about this specific area na, ki what is the next step after exhaustive risk management and relevant area, we will negotiate the terms. We'll sit down and talk to each other and see what negotiations can be done about it. Okay, so it's going to be negotiate the terms of the contract. Next point, what happens when the transaction is finalized? The moment you have finalized the transaction, what will happen? Venture capitalists take over day to day operations of the company. Venture capitalist assumes certain rights and responsibilities but not involved in day to day activities. Then an entrepreneurial loses all control over the project, or venture capitalist starts a new evaluation process. What happens when the transaction is finalized? See, when the transaction is finalized, we are all set to work together, isn't it? So when we are looking forward to it, then the venture capitalist will come up and see what are venture capitalist responsibilities. First of all, when the transactions are finalized, then they know they have to execute. Once they have to execute, there are multiple things that they have to look forward to now. The rights and responsibilities of the venture capitalist. They have the right over the organization, and at the same time they have the responsibilities to take care of the working as well. So but it is not involved in day-to-day operations. It's not involved in day-to-day operations. They are taking care of the finances and they are helping them and guiding them for their product development and product sale. So in this case, one thing is clear that the answer is B. Venture capitalist assumes certain rights. They have their rights and responsibilities, but they are really not that pokey. They have to be told about each and everything that is happening in the business on a daily basis. That daily basis thing is not required. Venture capitalists are normally in the organization for a period of 3 to 7 years, all in all. Ki time period of 3 to 7 years is something that they expect ki this particular person is going to take care of your business. They will be helping the other company for this time span. Ki 3 to 7 years. After that, they will choose. They want to stay in that business or they want to leave. That is their call. That is not the call of the organization. That is the call of the venture capitalist, whether he wants to stay in this business further, and if he stays, he'll take over the rights. One thing is clear: if they stay now, then after they stay, they will take over the organization. They sometimes become the board of directors. They become so powerful because they already have money. They created the organization, so they can create a lot of problems for these organizations. And the reason is that these organizations are somewhat in their growing stage, है ना? So in their growing stage, when they have a problem, then unfortunately na, when the venture capitalists become stronger, he can take over the organization in no time. So when he takes over, the organization will lose the original promoter, the one who brought this business into the working, will lose their working altogether. That is something that happens in terms of venture capital. So that's why it is a little riskier. While angel investment investors are not someone who would be doing any of these things. But you never know. World has been changing a lot. So once your business grows, then how other people would try to take over your business and how do you protect it is the key. So in this case, when we talk about this area, The venture capital, they have the working, that is their responsibility to provide finances to these organizations along with giving them the survival skills of the market, because they are helping them to grow further. You know, why is the venture capital procedure described as difficult? As it involves low risk, it's quick and easy, it is undetermined and uncertain outcomes, and it guarantees a quick return. There is nothing called quick return. In the venture capital, you don't know what kind of money you'll be getting and whether you will be getting it or not, to be very honest. So basically, this is not something which there is low risk. There is a high risk. Secondly, in terms of the quick and easy, it is never quick and easy. Venture capital is basically defined as difficult because of the uncertainties. See, I was working. Aram say we were all working before 2019, and all of a sudden there was 2020 COVID. Now let's talk about Ukraine, and I think I was just going through a specific story. 1.5 year back when Russia attacked Ukraine, there were people who flew from, excuse me, they just flew from Ukraine, and as soon as they came out of Ukraine, they went to Israel. And there was some lady who was living in southern Israel. The point is, you move out from one war zone, and unfortunately, you enter the other war zone, right? And you had no clue about it. So, in the businesses, even if this happens, at one point of time, your business might be going extremely good, and then all of a sudden, what can happen is the market changes, and if you do not change in time, you can lose the market. One of the most astonishing but a very strong example is Nokia. Nokia lost its entire market in the country while it was leading India for years. Well, people used to blindly buy Nokias, and it was bought by the entire country because the phone was cheap, was sturdy, was something that they could use at any point of time. So this is what we call it. Okay? So the demand has turned very much, I would say, confusing and uncertain. That is why the key businesses have to keep evolving themselves. Acha, next point is what type of characteristics, what kind of investment characterize the Indian industry during the formative years. During the, acha, this is kind of question which we have done earlier as well. During the formative years, India used to have large scale private equity. Nahin, at that point of time, private equity was a baby. It was just developing. Venture capital style investments in small enterprises in early stages of development. This can happen because private firms were just budding at that point of time, and public sector undertakings were there, so they were government funded or industry, and there was investment exclusively in mature companies. And I know this thing, but there were small players who were existing, and now they have become bigger over the period of time because time passes and you become more and more better in your product, right? Acha everyone, we'll be soon starting with the revision batch for ABFM as well. So if you haven't looked forward to our batches yet now, then kindly check it out on our website, on our app for further details. Matlab, the batch would be starting from 3rd. So that means we will be covering the entire ABFM syllabus through the concepts, MCQs, whatever possible ways we can look forward to. This year, the examinations are changing the trend every single point of time. So please make sure that you are giving your best foot forward. And if you would like to join our revision batches, which has already started, you can use the code Y541 and get, currently you are having 80% discount on all our courses. So kindly go ahead and use the code Y541 and look forward towards the purchase of the revision batch as early as possible, because after this the discount will be lessened and the pricing would be more. So it's a very limited time period offer, so kindly check it out. So let's move on to the next question. Why have investments in private equity become more widespread in India in the last 10 years? Greater ease in selling small and early stage investments, desire for fund managers to have smaller portfolios, difficulty in managing larger portfolios without increasing the number of companies in portfolio, or lack of interest from large private equity companies. So when we talk about private equity now, um, there is no ease right now. People are buying and selling uh, the mutual funds and all on their basis. Desire for fund managers to handle smaller portfolios. Nay, the fund manager will never want to handle. It's like, can we live in a smaller house even if we can afford the bigger one, and currently living in the bigger one? Then difficulty in managing larger pools. You might be facing problems in managing larger pools, but what will you do? If you have got a lot of money, you will spread it out further. You remember portfolio management, we talked about it. Portfolio management is Warren Buffett's rule. Never put all the eggs in one basket. Put your spread up your money into the various units of different companies, so that if one company faces a loss, the entire industry is being hit and you can still receive some dividend out of it. Okay. Acha, what is that one reason for the shift or away from investments in small and early stage companies? Matlab, why do people leave these small and early stage companies? They are uncertain. They are babies, right? They are just developing. They are budding organizations which are currently not having enough experience even, and at the same time they do not have much assets, and then some witty and very sharp businessmen are also not there, because they're just beginning and they come to know about the entire processes. Once they are into the system, then they're growing further. But till then, even they have to suffer now. So, what is that one reason that they have to shift? That is increased difficulty in obtaining venture capital funding. Not very difficult. You have to have the required amount of capital there. Then is challenges in selling such investments. Then is lack of interest from foreign investors, or decreased risk appetite among the workers. Sorry, among the fund managers. Basically, now they are facing the problems in multiple areas. The shift from early stage companies and investments. See, the point is that if the company is small, it's just a budding organization. I've already bought it. Now I want someone else to buy it because I'm not getting the desired results right now. There are times that the company decides to part away from these investments. So basically, the problem is these organizations are budding. You thought they would grow. What if others are not thinking that way? So there is a challenge in selling these investments. Buying will not be a problem. Selling or departing from these investments can be a problematic situation. So it is challenges in selling such investments. Now, why do capital venture capitalists exist as an alternative to the traditional bank lending? It has to exist. Traditional bank lending has become very much, I would say, they are always asking about security. At the same time, traditional banking is something where you will have a lot of problems. Why the personalized loans have been created, so that people are not going through a lot of questions and all. Na? So what happens is the banks have to keep a check. If they are giving you good money, they will keep an assurance that whatever money they had given you, it is coming back. So basically, in this area, is it to compete with the banks in offering a little lower rate of interest, or then is to provide financing only to companies with intangible assets? And then is the discourage to discourage the establishment of new enterprises. That is also correct. This is also the point, but this is still not the most important. And when we talk about the area of the business altogether, when we talk about traditional bank lending, then in this area, their working is based upon give us a security. On that basis of security, we will be distributing your ultimately that we'll be disposing of, or we will be closing your account altogether. So in this case, the correct answer is going to be C. To address the high risk environment that the traditional institutions avoid, because someone has to get into the market, get the system into it, and then earn money. And ultimately, that's the goal. So let's look at the next question. Okay, visible now? What impact does the venture capitalist become um becoming a part owner on having the founder's control in the business? I was a venture capitalist, which helped a particular business to grow. So now the founder retains the complete control, or independence can be given to the venture capitalist becoming a part owner. कि मतलब we said कि sir you have given us money, rather than leaving for the next 3 to 7 years. Excuse me. Because normally what happens is if you have a business, na, the venture capitalist, whatever money the venture capitalist is having in the business, this accumulated funds that he has given after 3 to 7 years, he will be exiting, and maybe they will ask the company to take back those shares, or they will give it to the organization which turns out beneficial for them, because ultimately you're just an investment now. So in this case, the founder will retain the entire portion. The founder gains more control, or and owner in with the involvement of venture capitalist, or the venture capitalist has no influence on the founder's control, or the founder experiences is a loss of independence and control over the business when a venture capitalist becomes a part owner. This is why I strongly believe as soon as we choose anybody else to become a part owner, na, at that point of time, the organization is itself, that is itself something which is problematic for the business. You know? So in this case, see, Steve Jobs, Infosys, and Mr. Narayan Murthy. Steve Jobs was removed from his own organization. Apple was his thought process. But as soon as he wanted funds, he went on to the area of the that part of they he went to okay, when we talk about Steve Jobs, his part, when they wanted investors to join in, as soon as there were a lot of investors, they threw him out of his own company. So this happens, the founder loses its charm and its importance if they are not keeping a track on it. So in this case, one of the realities is, if the venture capitalist thinks that this business has something, he will try to take over the business. He will definitely try to do that. So in this case, the founder, if experiences a loss of independence and control over the business when the venture capitalist becomes owner, because ultimately you will have to ask everything to the venture capitalist as well. So all the important decisions of the organization are basically taken while considering the venture capitalist, which will definitely not provide the freedom to the organization to grow further at all. है ना? Okay, so that's it for the day, everyone. But before I end my session, again, let's talk about our website and where to go in order. Good morning, everyone. Welcome to Offices Adda 24/7. My name is Niharika Valia Bhatnagar, and I'm with you with the area of ABFM. We were talking about private equity and venture capital. So this is, I think, the third class for the topic of private equity and venture capital. This is a topic of Module D, fourth chapter. Acha, when we talk about this, I hope you have already reviewed that we have started with our revision batches already, and my revision batch for ABFM is starting soon. If you're looking forward to it, then kindly hurry up and get it done as early as possible to buy that particular course, or to review the course or enroll into it. What you can do is you can use the code Y541 to get the maximum discounts. So kindly go ahead and check it out on our website, on our app, for further details. Okay, so let's start with the particular class. I hope I'm clearly audible as well as visible. चलिए, Let's begin with the class. In the last class, we were talking about private equity and venture capital. So, continuing it further. The first question says, why do venture capitalists exist as an alternative to traditional bank lending? But the earlier traditional bank lending was good. It was always good. If we talk about the traditional bank lending, that has been a source of borrowings for so many people. But why is this that the venture capitalists are gaining more and more importance these days? Have you ever reviewed that part? They're making a lot of, they are currently making a lot of money through the venture capital working over there. Overall, the show was started, Shark Tank India. There are so many other things that were added in it. But what was the reason behind it? When we talk about the venture capitalists, na, the venture capitalists are existing because they are not only providing loans, they are also providing them the freedom to grow. At the same time, they are also providing them the guidance. That is what they need in terms of their learning, right? So this is the particular point which really helps them to grow further. Okay? Then everyone. So when we talk about this particular area, why do venture capitalists exist as an alternative? They exist as an alternative to compete with the banks to offer low interest rate, nahi. To provide financing only to companies as tangible assets. See, if they are providing just machinery, it's not worth it. To address the high risk environment that traditional financial institutions avoid. I think we did the similar question in a previous class as well. They are just trying to avoid whatever the traditional financial organizations never wanted. That is, they would never want ki dekhiye that the organization faces losses and all, and if the organization is a little adventurous, then the banks would be like, "Nee, nee, we will not put money into this because it's not worth it." है ना? That is something that would be there. So this is to discourage the establishment of new enterprises. This is something which is anti-competitive, which is not allowed in our country. So one thing is for sure, traditional banking system was never giving loans without securities. Now, venture capitalist reviews the possibility of this organization to grow further, and he grabs the opportunity and says, yes, to address the high risk environment that the traditional banking institutions are avoiding. This is what they choose. Acha, next point is, what impact does the venture capitalist becoming a part owner have on the founder's control in the business? Acha, venture capitalist is coming in the business. If you have seen the Shark Tank India or something, na, Shark Tank India is one of the best examples of venture capitalists. So what they do is when they become a part of that organization, then they would be like, "Ki, what are we getting? Why should I invest my money into your organization?" Simple reason. We would like to know, why are we putting money into your business? Okay, audible clearly. So when we talk about this part, the founder retains the complete control and independence even when the venture capitalist becomes a part owner. Venture capitalist actually becomes a part owner, but he doesn't become a major owner of the organization. Because think about it. I promoted this organization. I brought this organization up. And then a venture capitalist comes and says that I would like to take a part of it. I am financing you. I would be guiding you. Then after 3 to 7 years, I would be exiting the organization as well. So that, but till then, I would like to have my equity share. So the founder gains more control over the business. The venture capitalist has no influence on the founder's control, or the founder's experiences a loss of independence and control over the business when capitalist becomes a part owner. See, when you are talking about the portion of venture capitalist entering into your business, now one thing is for sure. He will ask, if he asks for the equity portion, he's not providing you as a borrowing, he's not providing you as an interest free loan. If he says I am here to take a part of your business, that means if he, even if he takes 10 to 15% now, they can throw you out of your organization. uh Best examples was Narayan Murthy was thrown out of his own organizations once the board of directors became a point where the board of directors was strongly into this area that he should be out of this organization. He founded the company. He grew the company to the extent it is standing right now. And he was actually since once you get more and more investors in the organization, your share decreases. So what happened was he could never he couldn't stay in the organization. But after he left, the organization started declining, so he was called back. So that's how the entire working goes on. Na. So when we talk about this area, the founder definitely loses their importance. But there's one more fact that when we look forward to this area, na, one thing is clear, that the venture capitalists may be taking away your importance as well, taking control over the organization, but is also guiding as well as providing finances to you. So both the things are there. The founders experiences a loss of independence and control over the business when the venture capitalist becomes a part owner. So they are normally reluctant to this part. They're like, I wish this can be done in a simpler manner. Excuse me. Why does the return of earnings tend to be delayed in venture capital financing? See, you are putting money into seed. Matlab, it's just a part, it's a very small plant which is not right now bearing fruit as well. If it is not having that particular thing, so it's obvious till the time the organization is not growing, how will it make money for you? You know? The return of earnings is quick in venture capital financing due to low risk factors. Venture capital financing aims for short term objectives, resulting in quick returns. The return of earnings is often delayed in venture capital financing because investments are made with long term objective in mind and contributing to the postponement of returns. Last is delayed returns are uncommon in venture capital financing as it focuses on predictability. You cannot predict the future. So, one point is clear, these organizations cannot predict the future. Okay. So now when we're talking about this area, what will happen? The D part is definitely not true. The return of earnings is quick in venture capital financing due to low risk factors are never there. In terms of venture capitalists, you are putting money into an organization which is right now have just started growing. So you don't know about it as well. So there's a closure point there as well. Venture capital financing aims for short term objectives. It never looks forward towards short term. The organization will take time to grow. Once it's grown, it will show its capacity and then it will diversify its work. So you don't know where it would go. It's just like a kid. You don't know how will he grow in his future. So the point would be C. The return of earnings is often delayed in venture capital financing because investments are made with long term objective in mind, contributing to the postponement of returns. Acha, next pointer. Which globally recognized alternate investment asset manager invested in JBF Industries Limited? We were talking about various, in our book, na, they have given a lot of examples in terms of venture capital. So, which particular company had taken over JBF Industries Limited? Goldman Sachs or Zodius Technology Fund or Kohlberg Kravis and Roberts, that is KKR, one of the top tier alternatives investment assets globally entered into. Acha nahi, the answer is already given in this. Entered into the definitive agreement to invest in US dollars 150 million in Mumbai based JBF Limited or Pepperfry. Okay, go ahead and try the answer. So I think what I'll do is let me edit it first. Somehow I added the answer in it itself. Okay, now that is better. For the PDF of these classes, you can find it on the Telegram channel. You just have to go onto the Telegram channel. That is CIIB CIIB exam 2023. That is on CAIIB exam 2023, and the name is Niharika ma'am. Okay. This is the name of the Telegram channel that you can join and you can study there. Chaliye. Now let's move on to the next question. Chaliye. Let's continue. Okay. Now the answer was Kohlberg, Kravis, and Roberts. Okay. Acha, next question. This is related to the what are some essential contributions made by foreign venture capitalist investors in India? Limited involvement in post financing activities, lack of due diligence or incorporating Western investment philosophies, rigorous due diligence and active post financing, or passive. I think a similar question was also done earlier. So I'll just see what kind of question I can be added further. So when we talk about foreign investors, they introduce or they incorporate Western philosophies. In our country, the stock exchanges, for example, Nasdaq, or we can say, I think the Japanese stock exchange is also very difficult to enter. In India, SEBI is not that. I would say it is tough to enter now. The listed to become a listed company is very difficult, but in other countries, especially at the international level, when we look at New York Stock Exchange, it is just Nasdaq is the name of that particular their stock index, and that is very difficult to enter. Right? That is name is Nasdaq. Acha. What type of investments characterized the Indian industry during its formative years? When India was being formed, what are the particular things that happened? Large scale private equity was there, venture capital investment in small enterprises in early stages of development, or investment in exclusively in mature companies or government funded projects. The answer is government funded projects is acha nahi, this is for PSUs only na. Public sector undertaking for them it was this. For venture capitalists there were small people. They were kiddos at that point of time. For example, Jamshedji Tata, he was an exceptional case. He once there are certain stories that he wasn't allowed into a certain hotel that was basically reserved for the Britishers. So what he did was he made his own hotel. That is the Taj Hotel that we know about. So in Mumbai. So that is how they started growing further. But most of when the capitalists at that point of time were small, and they were in the early stages of development. Hardly a few organizations were grown enough that could look forward towards their future, right? So most of them were still below the belt of being normal or small enterprises. Why have investments in private equity become more widespread in India in the last 10 years? Private equity has been growing because now organizations are able to get specific money. See, if I don't know you, I don't want you to be a part of my organization, and I'm still going for the listing. You can take over my company. At least I can choose my enemies on my own. So that is what they do. So you keep a few people under control, or I can say with an association with you. You can be in a partnership in such a way that both of you know what kind of share you will have in your organization, what kind of share they will have in the organization. So, in this case, greater ease in selling small and early stage investments, desire for fund managers to handle smaller portfolios, then difficulty in managing larger pools or lack of interest in large. They have a problem in larger pools of capital without increasing the number of companies in the portfolio. So in this case, one thing is there, that is they are having problems with larger pools, managing larger pools of capital. Okay, next question. What is that one reason for the shift away from investment in small and early stage companies? increased difficulty in obtaining venture capital, challenges in selling such investments, lack of interest, or decreased risk appetite. What would be the answer in this case? When we're looking at this question that says, what is that one reason that investments are, see, early stage companies are just babies. You don't even know how this baby will grow up, isn't it? So you would never want to have the risk of these organizations there. So what the basic problem is, you cannot part ways from these organizations that easily. Who will buy it? You got it because you thought there was a scope. Now, even you know there's no scope. Now, how will you find out the organization which will feel that nay, this organization has a scope and will buy it from you? Right? That is something which is hard to find. Chali. Now, let's look at the next question. In this case, the answer is challenging in selling such investments. Acha, next question. In venture capital, what role does carry interest play for venture partners? Matlab, the venture partners, they have a part in the business now. So in the venture capital overall investments. So what role does carry interest play for venture partners? They have salary compensation or operational decision making power, a percentage of returns from the cash outs, or managing the limited partners. When we talk about the partners there, the benefit that they have is related to the investments, a percentage of return, whatever the return is from the investment, cash outs comes to them only. So that means if the organization is making money, your investment is automatically growing. You are not working, the organization is working and giving you a chunk of it. So that is a percentage of returns from investment cash outs. Okay, here comes the next question. I think I'll have to reduce it a bit. Visible now? What distinguishes general partners from managing partners in venture capital firm? General partners focus on operational matters while managing partners focus on investments. General partners have a say in investment decisions while managing partners day to day operations. General partners are responsible for bringing new financial banking. Managing partners are evaluate new business opportunities. And general partners are more senior than the managing partner in terms of hierarchy. Matlab, it's like, can we say that the managing partners have all the headache? How can we say that they are more senior general partners? You know? Then, if we talk about general partners, we will call them whenever there's something important going on. But managing partners would be doing the day-to-day operations. They cannot call the general partners every single day ki, hello sir, we have this kind of discussion with you, want to have this kind of discussion with you. He'll be like, we are for the general working, for day-to-day working or managing, you should be there. So in this case the answer would be what? The answer in this case will come out to be the general partners have a say in the investment decisions while the managing partners have handle the day-to-day operations. They handle only the day-to-day working altogether. Done? Chaliye. Let's continue further. What is the primary purpose of entrepreneur in residence in venture capital firm? Managing day-to-day operations, providing exit strategies for investments, creating another startup that attracts good investments, or evaluating limited partners' performance. What is the particular or primary, the first and the most important purpose of EIR, entrepreneur in residence? When we are looking at entrepreneur in residence, basically now these are the people who create another startup that attracts good investment. See, the point is you have sometimes you just have to show your caliber, that we have the caliber, and through that you get more people into your business. So that is C, creating another startup that attracts good investment. That is the thing. Creating another startup that attracts good investment. This is a particular work of the entrepreneur in residence. He's going to create all those startups where the venture capitalists can invest further. And these kind of investments are not only beneficial for the startups but also for the venture capitalists, because one more source of earning gets opened for them. But and at the same time, lesser vigilance would be required, because the entrepreneur in residence will definitely I would say he would definitely bring up more venture into the organization. That is, the venturers are basically adventurer people. These people love adventure. So that is what I would say, that these people are entrepreneur in residence is basically the entrepreneur which will bring up more and more working for the organizations. They will put the money. Once that entrepreneur develops the business further, the startup goes well, the venture capital can choose whether to stay in the business or exit after a certain number of years. So answer is creating another startup that attracts good investments. Acha, this particular question requires little editing. So what we can do is, let's do this question tomorrow. So we'll continue with the particular area of the different types of partners. There are different types of partners in a venture capital firm. So we'll be talking about them in detail in the upcoming class. Till then, thank you so much for being there. And if you haven't taken up our courses, kindly hurry up. The time is ticking away, and the sale would be ending soon. So it's better that whenever you get an opportunity, you buy the courses at the lowest prices. Let me show you where to go. You have to go on to our website, that is www.adda247.com. Go on to the area of JIB and CIIB. Just open up the area of JIB and CIIB. Here you will find CIIB November 2023. When you go on to the area of CIIB November 2023, then what you can do is you have to open up the area of CAIIB Mahapack 2.0. This is helpful for all the people who are preparing for the upcoming year, right? So for them it is a very good opportunity. And if you've already done it once and you are preparing and you are looking forward towards revision, then you can take up our CAIIB Power Pack. For the Power Pack, you just have to click on Buy Now and use the code Y541, apply it, and you will get it for 2999.80. So this is you just have to use the code Y541 and you are getting 81% discount if you go through the app. So download the app as well and get this 81% discount, because the revision batch has already started. You can be benefited through it. ABM examination is here, then there are so many exams already aligned, right? So this is just a beginning. So kindly join the batch as early as possible so that you can prepare properly. Okay, what are we providing in this particular Mahapack, in this Power Pack revision batch? We are giving 500 hours of live classes, 136 test series, 150 ebooks, as well as 243 videos are already added. So for you, what you can do is, the classes are interacting, recording videos are also available. So whatever you are looking forward to, then kindly join the batch accordingly as early as possible so that you can get the first mover advantage. Matlab, if you start preparation in time at least, and revision in time, then you won't face any problem in the examination, because after this exam more and more of subjective questions would be adding. So why to linger further, है ना? So go ahead and check it out on our website or in our app for further details. Thank you so much, everyone.